Hi, I'm Jamie with The Saving Secret, where I help you become more intentional with your money. In today's video, I'm going to be going over what is a margin loan. So recently with Fidelity, I turned my regular cash brokerage account into a margin account. And so I'll go through what is a margin account, does it make sense for you, what are some pros, cons, and some of the great visibility details into this. So stay tuned, we're going to go over it. All right, so margin loans. So here on the Fidelity website, there's a great spot that talks about margin loans. So if you look down here, what is a margin loan? So if you're interested in borrowing extra money, it's basically a line of credit that you can have on your investment. So for example, if you have a brokerage account with $30,000 in it, what you're able to do is once you apply for margin, you will have the ability to borrow up to $15,000 as a line of credit. So then you'd have a total available of $45,000. So that's just an example of what a margin loan is. Now, again, what does it do? It gives you increased securities to allow you to buy more securities than you could with just cash. Now, that's important for people who are interested in day trading, those things like that. Another thing I really like about it is really it just gives you a convenient line of credit. And this is kind of what I've used it for, is it's just kind of nice as kind of a safety net, if so to speak, is that you can borrow against your assets. Now, I'm not saying that you want to do it on the regular, but it gives you that flexibility if you need to have it. So, margin can be used as a short-term coverage gap. So what are some of the advantages? It's super flexible. You can make large purchases. You can access your cash without having to sell investments. And this is really powerful. One of the reasons that I personally got excited about this is because if you have an investment right now, maybe the market hasn't done so well, and you don't really want to sell the assets that you have because you think they're really great assets for the long term, but you need a little access to cash, this is a way to do it. You can have very different low rates. It's pretty simple to get approved. There's just a couple forms to fill out, and within 2 or 3 business days, you can get that access. Now, there are some risks associated with margin loans. So technically, you want to make sure that if you do borrow the loan, that you're not over leveraging yourself, because if you over leverage yourself, essentially, if you borrow everything that you can and your assets lose value, like 50% of their value, then you'll run into something called a margin call. You don't want to run into a margin call. So and a margin call is basically where you need to immediately pay back the loan. Again, a lot of people talk about super scary about ever having a margin call. Really, if you're paying attention to your investments and you're not buying items with huge swings in the investments, you should really not have to worry about margin calls as much, but it is a risk that you should be aware of. And they also have some extra education there for you. One of the things that I think is cool is the margin borrowing aspect. And it's literally kind of like having a credit card that you have at your disposal, and you can use it for whatever you want. And you can do it for real estate transactions. You can do it for a large purchase. Like I said, without having to cash out investments, you can take that money out tax-free because it's a loan, and you can move forward with making a purchase. So I just think it's a great underutilized option for many people. So again, when you're looking at ways to get access to cash, they kind of walk through 4 different ones. You could use a traditional home mortgage, you could use a home equity line of credit, or credit card. And so it kind of gives you through some of the benefits and some of the challenges there. So really, to set up a margin loan, one of the things that's great is there's really no setup costs. It's pretty free, especially with Fidelity. There's no real setup charges, and there are risks. We talked about the margin calls. So obviously, when your securities like stocks or mutual funds, index funds, or ETFs go down a substantial percentage, your access to what you can loan goes down. So you don't want to over leverage yourself. The rates are variable, but definitely better than you will find on your traditional credit cards. Again, it's secured by the assets that you have in there. Now, one of the things that's neat is if you are not doing the standard deduction, if you're doing a regular, if you're doing a itemized deduction, again, I'm not a tax professional, but you can actually deduct the interest on there. So it's part on the itemized deduction that you can potentially do. Again, not a tax professional. You're going to want to look into it a little bit more details, but if you do have interest from this, there's a good chance that you can deduct it. Obviously, you can't deduct taxable interest on your credit cards, right? You can access your funds anytime. And one of the things that's also neat about the margin is you really don't have a payback schedule. Now, of course, the longer you don't pay, the more interest you'll have to pay. So it's basically daily interest is accrued. However, you don't have a minimum payment that you need. So if you need to borrow a large amount of money, you can take that out and then repay it back as needed. So, which is really cool. Obviously, if you had a home equity line of credit, there's going to be some minimum monthly payment required for pretty much most of these. Again, it's just a different variety. And if you, just because you have margin applied to your account and you don't use it, you're not going to be charged interest. It's just having like a credit card with no interest balance. And so it's just kind of a neat process on there. Another thing that people use margin for is for trading. So if people wanted to become a day trader, this is really where you're going to want to live, is having a margin account. And I'm not going to get really into active investing and day trading. That's a whole nother video for a whole nother day. And that's probably not going to be from me because I am not an active day trader. I'm more of a buy, hold, and borrow against your assets to build more assets potentially. So I'm not a huge buy and sell kind of investor. But that is something that works for a lot of people, and there's a lot of channels out there that talk about it. And if you're going to get into day trading, you're going to need to have margin because you're able to make more trades, inter-trades within the day, and that's going to be very important to you. And that's how a lot of people use margin. But I think it's neat that you have it for borrowing as well. So there's some other videos that talk about it. Again, if you wanted to do a limited margin in an IRA, they have a whole nother video on that. There's a margin calculator about those. I'll talk about the margin rates. What can you expect what is your interest rate that you'll pay? So it is one of those, the more you have in your account, the less interest you'll pay. So once, just kind of starting out, if you don't have a lot of cash in your account, you're going to start at the 8.575. If you have more than $50,000 in there, you can go 7.125%, and then it continues to go down from there. So again, what is your rate and how do they calculate it? This is a great example. So if you borrowed $100,000 to buy a stock or equity that you really believe in and it went up, this is how it would calculate. You would basically say, hey, you take your interest rate times your daily balance, and that would be your yearly interest. You divide it by 360, and you always divide it by 360, not 365. It's an accounting thing, and that's how you get your daily interest. Fidelity charges, so you'll get, daily interest, but you're expected to pay it. The bill will be due, charge the interest on that the following the 20th of each month. But you'd say, oh, but there's no payment. So essentially, if you don't have that, it would just be added to your loan that you took out. So those are some of the nuts and bolts about margin. Again, Fidelity is a great platform to get into it. So if you want to know about it, you can add it to different accounts. And there's pretty much securities you can add it to. Most equities, ETFs, trading over $3 a share. Most mutual funds that you've held for at least 30 days. Stocks and those things. So you can click this button to apply. If you have an existing brokerage account, you can add it. Or if you need to open one with margin, it's a very easy process. So let me know what you guys think. Is margin something that you have? Is it something that you're interested in? Do you think margin is a good way to borrow money? Let me know what you think in the comment section below. I've done a lot of different videos about Fidelity and their features. If there's any future videos you'd like to see, please let me know. I've done some other videos you're welcome to check out. Thank you so much for watching.